Hi, this is Rob Beardsley, and you're listening to the Passive Investor Show.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Just in case you didn't get enough of Rob Beardsley, we brought him back for our infamous Quick Hitter Investor 101 series. Rob oversees acquisitions and capital markets for Lone Star Capital. And if you want to learn more, revert back to the previous episode. It's great to have you back, Rob. Thank you for coming.
Absolutely.
Rob, you have a YouTube channel and it's very, very informative. And I love what you do. You're out there walking. You're just everyday guy explaining the nuances of the real estate business. Can you explain one thing about internal rate of returns and the difference between the average rate of return and why sponsors are focusing more of their interest on the average rate of return than the IRR?
Absolutely. So the IRR calculation is really the industry standard calculation for all preferred equity investments. And you might ask the question, why is that? And the answer is because IRR most accurately takes into account the lumpiness of cash flows which occur in private equity, right? Where we have a deal that we put $5 million out and then we get some cash flows along the way. Those cash flows may grow. We may refi and get $1 million back. And then finally, 5 years down the road or 10 years down the road, we sell the property and get a nice lump sum. So that wasn't a smooth stream of cash flows. It wasn't like a bond where you invest $1 million and you just get 100,000 every single year and then you get the $1 million back. That would be easy. And the IRR in that scenario that I just mentioned, where you put in $1 million and get 10% back, that would be a 10% IRR. And it would be a 10% average annual return. The IRR and the AAR are the same there. However, for a deal, for example, where you invest $1 million and you get no cash flow for year one, no cash flow for year two, and then in year three, you get $2 million. Well, you doubled your money, but you got no cash flow in the first 2 years. So the IRR and the AAR would not match, because while the AAR would simply look at 1 to 2 over 3 years, and then you'd take 100% return divided by 3, and that'd be a 33% average annual return. The IRR would be something less. It would be more like 25%. And that's because the IRR is it's factoring in the time value of money. It discounted the future cash flows at a greater rate than the cash flows that were occurring sooner. And so first I'll lay on you the technical definition of IRR. It's not going to make sense to anybody, but I just have to say it. So the IRR is the net present value, which makes the future cash flows equals zero. It's a very technical definition, but if you can wrap your head around that idea, it's basically we're calculating a discount rate, which basically takes these lumpy cash flows and then smooths them out as if we were receiving a bond like compounding return. So that way we can actually compare investments of all different types. After kind of hearing that explanation, you should understand that IRR is a far more robust calculation. And when you look at a deal, depending on the profile of it, it may look better when you present AAR. For example, if you have a value add deal where the cash flows aren't so great, but then you're projecting later down the road to sell for a big price, you're going to have a good AAR, but the IRR will be less. So to answer, you asked, well, why are sponsors going to the AAR? There's a few reasons. One simple reason that's not going to offend anybody is that it makes more sense to the average investor. Average annual return. It just makes sense, right? But the more offensive reason would be that sponsors want to make their deal look better than it actually is. And if they can say, hey, this deal's a 20% AAR, well, that sounds great, but it's only a 15% IRR. I don't even know what that means. So that's, I think that's the long and short answer.
I appreciate that because I tell people, if you're looking at it from an IRR standpoint, when it starts hitting 13, that's when I'm starting to explore it. Anything less than that, I guess, maybe even like high 12s is where I'm really starting to get interested. But 15 still sounds good to me. I know that we trickled back down from, I guess it was like 18, 20s, and then it was 17 for a while. And then now it's sitting around that 14, 15. So that's why I say anything at 13 is that number for me to start exploring, or as you said in a previous show, start underwriting the deal to see if you want to go further with it. So thank you for sharing that concept and the differences and why sponsors are doing what they are. Rob, how can we stay in contact with you?
So if you want to learn more about what we're doing over at Lone Star Capital, you can head over to lscre.com. That stands for Lone Star Capital Real Estate.com. And on our website, you can get a free download of our underwriting model that we use every day to underwrite deals. And if you want to get in touch, you can hit the Invest With Us form and fill it out and get in touch with us.
Thank you for stopping by today, Rob. We've really enjoyed the conversation. Please stop by again.
Thanks.
Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.